Best dividend stocks for 2019. Let's go deep. Best dividend stocks for 2019. Let's go deep. As always, we are trading real money, real account, showing you our best dividend investments for 2019. And let's start by one. As the market are going down and down, then I am starting to accumulate slowly but surely, which is the OCSI, the Oaktree Strategic Income Corp. You have almost 8% dividend yield, 7.92%. So what I do for 2019 is I'm looking for yield. Why? Because it's like a bond for me, okay? Let's say we have 3-4 years of a recession. Market goes down, market goes down, market goes down, market goes down, right? But so long your stock doesn't go down, and then the cycle completes and we go back up. Every year that you have the cycle going down, guess what? Boom. 7.92%, 7.92%, 7.92%. As far as I'm concerned, the true rate of inflation is about 6%. So I am keeping in pace. The money is not losing money. I'm almost doing a net 2%. And that's the danger. You have to be careful. When the bank tells you they give you 2 or 3%, you got to compare that with the true rate of inflation at 6%. You know, the pundit tells you that the true rate of inflation is 3%. I don't know about you, but when you look at your insurance, your medical insurance for this year, and you look at the increase, it's certainly not 3%. Okay? So you got to always beat that 6%, or at the very least, the 10-year treasury, the 3%, right? So I like this stock. It's part of the Oaktree Capital. It's a BDC. So you are going to tell me what is a BDC. So a BDC is a business development company. It's a form of unregistered closed-end investment company in the US that invests in small and medium-sized businesses. There's a lot of BDCs stocks that offer very high yield, everybody. Make your research. What I like about it is that OCSI is part of the Oaktree Capital. If you want something a little more stable and less risky, then you would go directly for the Oaktree Group from Howard Marks. You know, I'm a big fan of the Warren Buffett, Charlie Munger, Howard Marks letters. So you go to OAK and then you get a 6.88%. So this one is still very good. And this stock is more stable. Obviously, it's a $40 stock. So obviously, company more stable. At the same time, remember, as prices goes down in all of those, the yield, you know, the cost on yield is going up. Okay, your yield is going up. So that's awesome. You know, prices are going down right now. You want to pick up the highest yield you want and layer some. So I like to layer some at you see here 6.88%. I'm going to show you some at 10+%. I layer even some at 3%. So then you have a blended rate if you assume that you invest the same amount of money. Let's say you invest 5K, 5K, and 5K. Of course, you have different types of shares. You might have 200 shares here. You might have 100 shares here, 20 shares here. But the key is you are constant with the amount invested and the rate of return. And then you have what I call a blended rate that is going to help you for 2019, and that will be paying you the highest yield dividend stocks, the best dividend stocks, you know, in the S&P 500. Okay, so let's get going. Next, I like a company called CCIM. So sorry, that was CCI. So CCI is a great company. It's Crown Castle International. They do a lot of cell towers. So CCI offers a 4.07% yield, and I think we are going to get much better. So some of the stuff that we do that is different than others is we are going to go to charts, and I'm going to give you support and entry point on CCI, at which point I'm going to deploy some money, right? Well, I think it's going to be very attractive because the price to earning ratio, as you can see here, is very high. So I want a very clear pullback on this thing, and let me show you on the full Pro Tool. And by the way, before we do that, let's look at OCSI, the Oaktree Capital. My targets are as follows. 3 targets. I have a target here at 746 to add more, right? Even though I have some, I will continue to add more. I want to have about 1,000 shares on this thing. Okay, so I'll add at 746 and 680. So obviously 680 is the best area. I want this that matches your low in 2016. It's the all-time low. So 680 to 746, you are in the buy here, and we are at 783. So it's not like it's very far from where we are on OCSI. Now let's move into CCI. So for the people who don't know who CCI is, it's a very good company actually. It's one of the biggest holding company from Bill Gates. It's a real estate investment trust that owns and operates in the US, and leases back wireless infrastructure like cell towers and stuff like that in the US and Puerto Rico. So what I like about this has no drama, with Asian market and stuff like that. It's purely a US play with Puerto Rico. Okay, problem that I don't like here is that it's the price to earning ratio is high, but going into 2019, I want you to be very clear on the entry point and exit points with that type of rate. So obviously on this one we are going to wait for a nice pullback before we get in. Look, current price to earning ratio 103.54, and even on the forward P, it's a little rich for my test, 68p, but it's definitively one that you want to put on your watch list, because look, even now before the rebound we are at a 4% yield. So CCI, let's go. So for that I'm going to take our full Pro Tool and the chart since 1999, and I'm going to zoom, and here's where I want to buy it. Red dash to red dash is what I want. And if within the next few months before June 2019, we can get this dividend paying stock here at this 95 100 area, this is your buy zone on this one. And that will be wonderful, because remember, it drops, it drops, it drops, and guess what? That's a great buy here for a great dividend stock. So again, Crown Castle International, buy 95 100 for me, with an increased yield that will be way above the 4%. So I'm looking for that. I'm waiting patiently. Next is Public Storage. Is one of the biggest storage play in the US. It has been a great one for our family for many years, but I want a decent retracement. I'm looking here, the 180. If that fails, so I'm going to start accumulating here. Let me show you, because we are at 204. So 180 for 2019, and you see those plays right now that I'm giving you, you can prepare them months in advance. You can even put buy orders, limit orders, So 140, 180, and I even going to buy the lows here that we had about the 190. So I'm going to buy those 3 areas. Starting a position at 190, add at 180, finish it at 140. And this is the stuff to hold. Plus those are very good during recession time, because people, park their stuff in storage places. And right now the dividend on this is over the 10-year treasury. Again, right now you're at 3.9%, and again, according to my zone entries, right, at 190 to the 180 to the 140s, this yield is going to do only one thing for the next few months. Expand, expand, and expand. And guess what? We'll get it. Other contrarian plays that I have talked about and done through all video that you want to check. I talked about IBM, buying the 112 trend line to the 100 IBM. So check that zones. We are coming close. You know, we're at 116. Of course, wait the 100, 112 area, even 95 on IBM. Those are the three zones. We talked about General Mills coming close. We talked about the 30, 33 area on General Mills. So I hope this video is helpful. You see those yields provide you returns between 4%, right, to the 7.9% from OCSI, and they are all expanding, and those are out of the box dividend yield and dividend stocks compared to the aristocrat or others that you have heard about. So those are the more aggressive one. I would layer them out, and I have one more, which is a great gift. It's the IEP. It's the ICANN Enterprises Depository. You make 11.75%. Again, I will layer those from 4% to about 11.75%. This company is from Carl Icahn. You know, make your due diligence. Obviously, those are a little more risky. I have a 50 target, and at 50, this will be wonderful. It's already 11.75, so imagine when it is 50, how much the yield will be. Okay, and again, diversified. Invest small amounts of money on each of those. If you are interested, this is what I'm going to do with my own money, my real accounts, as always, and try to help you think wealth differently to beat the 10-year treasury and use those as a coupon, like a bond, that as a bond yield that beats the bond, you know, of the 10-year treasury by 3%. And just be patient, keep them, let them compound for a few years, even through a recession, you know, you get that income, okay? And some of those stocks, by the way, have calls and puts, and you could even sell and add income by selling the cover calls. Okay, so I hope it's helpful. I hope it helps you think wealth differently. And as always, if you're interested in what we do and you want to learn more from what I've done for the past 22 years, from the hedge fund industry, from the prop trading side, from having our own software company for institutions and retail traders, check the link below. You have absolutely free a 14 days trading and investing challenge, Think Wealth Differently, that you can go through with an event that we recorded as well that gives you the big pictures. You take care, you stay safe, and I'll see you on the other video. And again, if those videos are helpful and you want to see more videos like this, please give us some likes, comment, be engaged in those videos. That makes everything for us to do more and more videos for you guys. Take care and stay safe.